Good afternoon, traders. My name is Tomasz Wiśniewski. I'm a chief analyst in Alpari Research and Analysis, and this is daily analytical report with Alpari. I'm sorry. From the fundamental point of view, not much is happening again. The main story of the day is firing of Mr. Comey, FBI director by Donald Trump, which is a political story. It's not a market story, but many so-called experts, they try to explain the current situation on the market using this story. So there's increased uncertainty. That is why, for example, gold is heading higher today. It's a good explanation as any. I do not believe in that. But as we always say, the market needs a story, needs a leading story, needs a headline, and we're now living in the environment of very low volatility. Everything is more or less known at the moment, so we're looking for other informations that can drive the market. And we got this about firing FBI director, which apparently brings uncertainty on the market, which triggers, for example, a correction on emerging markets, currencies, correction on stocks. It causes safe haven assets to go up. But in my opinion, I'm not so sure about that. If this is the result of firing FBI director, or it's just a typical market action that after a strong drop we do have a taking profits action on, for example, gold, or we just have a continuation of this reversal on euro, because it's also one of the main stories today, that euro is on weekly lows. So those drops after Macron was selected as a president are extended. Obviously, it's not a disappointment by the market participants, but it's just taking profit action, buy the rumors, sell the facts kind of action we can see now on euro. Let's look on the calendar. Not much is gonna happen today. We'll just have Mario Draghi speaking. But the thing is that overnight we will have an important event from the New Zealand. New Zealand dollar today is much stronger. So ahead of this decision, New Zealand dollar is gaining strength both against euro and against the American dollar as well. Actually, we do have a trading occasion connected with New Zealand dollar, which I will show you in a second. Tomorrow also we will have to remember about pack of data from Great Britain. From the fundamental point of view, that's actually it. Yesterday we had a bit of a Fed speak, but they were focusing on the balance sheet. We got Mr. Robert Kaplan, who's a Fed president from Dallas, and he showed a doubt on the pace of the rate hikes in US. This also maybe influenced a little bit this correction on American dollar that can be seen on a few instruments. Apart from that, as I said, Fed members, they mostly focused on the balance sheet. They didn't focus on interest rates, and that's actually it. Everyone is focused on firing Mr. Comey. In my opinion, it's not a big deal for the markets. It's just a typical, not even a market story, but a story that market do follow. So In lack of the important fundamental news, let's see what's happening from the technical point of view. What do we have here? Let me just do hide all, show all. As you can see, euro dollar just made new weekly lows 4 hours ago. Buyers can think about double bottom formation, but in my opinion, it won't happen. I think they will try to test those lows, at least those lows, or even break those and close the gap. So in my opinion, we should see at least 30-40 pips downswing. But so far they are creating a very short-term chance for an upswing, but in my opinion, in the midterm we should see a further drop. This is supported by a daily chart, where you can see bearish engulfing pattern, then the price follows that. So many buyers were taken off the market with stop loss orders, and I think that this negative sentiment should continue. On British pound, American dollar, as you can see, yesterday we created this rectangle here to anticipate a bigger correction like this one. It would end most likely here on a very important support, so we looked at that and welcomed this opportunity very much. But as you can see, after our daily analytical report, the price bounced from the upper line of this wedge correction and went higher, set almost new highs. So we have a kind of a double top formation with a shooting star. Here, remember about interest rate decisions, so British pound will be influenced. This pair will be influenced. From the technical point of view, everything is very optimistic. Price is making higher highs and higher lows. We are in an uptrend. We are above most of the important supports. No resistance, no major resistances ahead. So everything looks very promising here on this instrument. British pound to Canadian dollar. That was our scenario here, but it resulted as a false breakout. So there is no triple top formation yet. That is why we never use triple bottoms, triple tops formation for our trading. I don't use it in my system because I don't consider it as a strong signals. As you can see here, you have a huge divergence. You have a huge divergence, but the price does not want to go down. But it would be nice to see a breakout of this line and a test of this horizontal support, a positive test for buyers. So I would welcome here a bullish reversal pattern, like inverse head and shoulder formation or something, or a candlestick formation like a hammer or a bullish engulfing. If I would see this kind of formation, this horizontal support here on 1.7450, that would be a good buy signal, and most probably I would enter the market. New Zealand dollar to American dollar. As I said, New Zealand dollar is behaving very good right now. Actually, what we are having here is an inverse head and shoulder formation. Maybe this left shoulder is not the best one you saw in your life, but it's not important, as we broke the neckline. The price made typical pattern, lower lows and then higher low, and is making a higher high right now. So this is a trend reversal pattern. Here's one trend line. A lot of trend lines actually here. I would say that as long it looks promising, but as long as we stay above this level, the sentiment is negative still, because we have a lot of resistances ahead of us, like for example combination of this midterm trend line and this long-term pink line, which you can see is relevant. Right, so it looks optimistic, it looks alright, but there is no strong buy signal here, because first of all it's going against the trend, and second of all we are below important resistances, right? If we would beat them, that would be a legitimate invitation for a long position. So far we do not have that. I'm sorry. Euro to Japanese yen, after making new highs, stopped a little bit. They use this resistance as a support. So according to price action, there's a buy signal here, but not to my system, as we are a bit too high. I don't like entering trends when we are going so high without a major correction, right? I don't care if we are high or low. I can still enter the trade, but after a correction. If I don't see a correction, I'm worried that once I'm gonna enter, this correction will happen. So I'm avoiding this kind of a situation, and it pays. It pays quite a lot actually, this approach. It's better to be safe than sorry. I try to limit risk as much as possible. And that's my aim in trading. American dollar to Polish zloty. Look, beautiful setup. We do have this bullish engulfing on this correction equality pattern and those lows from November. And yesterday we were heading higher. Today we have a small correction, but still it's happening. It's happening. The price bounced on the correction equality pattern, and this is our scenario, an upswing, and it should happen. Maybe not today, because they are correcting this movement a little bit, but maybe tomorrow or the next week. But our bullish scenario is still on the table as long as we stay above this orange support here. Euro to Australian dollar. Here's our setup from the Trading Sniper video, where there is a good chance that the price will continue to go down, and we will have we will extend this correction movement that we started last week here on 5th of May. Why is that? Because well, we do have a steep uptrend, right? And we broke important horizontal resistance here. This breakout is legitimate, right? The price was going higher. Fair enough, there's an uptrend, there's a long-term and mid-term uptrend, but in the short term there is a chance for a correction here. Why is that? Two shooting star candles, and today the price is following that, and most probably they will like to test this support as this resistance as a support, because it was relevant here, as you can see. Resistance bounce, breakout, and maybe they will try to test this as a resistance. To that we do have 130 pips, so this occasion looks promising. Euro to New Zealand dollar is our next instrument. Situation is very similar, so we are very close to the next important support, and most probably the gravity will act here, will have a big role here. And we should see the price touching the neckline. This is a neckline of this inverse head and shoulder formation, left shoulder, head and right shoulder. This is the neckline. We are heading to this neckline after the price created double top formation here. Also, with the double top formation, what is important is that price couldn't hold above this horizontal support here on 1.57 57.60, right? They couldn't hold above this level, they couldn't hold this as a closest support, so after the breakout of the support it will become resistance. There is this resistance, there is this support, in our opinion now the price should aim this support here, this blue line. So in the midterm the sentiment is negative. Next instrument, our next instrument is New Zealand dollar to Swiss franc. So New Zealand dollar is showing strength here on a pair with American dollar. New Zealand dollar is showing a strength here on a pair with euro, and New Zealand dollar is showing strength here on a pair with Swiss franc. Yesterday we were telling you about the possibility of a reversal here. It was based on a few factors. First of all, there was a potential correction equality which didn't happen, so we can remove it. There was a potential resistance created by this support, right? But it didn't stop them, and it was the upper line of the flag, which didn't stop them as well. So, and again, it's very important. That is why we love price action, because price action is advising you to wait for the reaction on support or resistance. We didn't see a reaction here, so we didn't enter the market with a short position. Simple as that. If we would see a bounce here, like a shooting star or a bearish engulfing, we would consider entering the market. But we didn't see that, so we didn't enter the market. So now, with this breakout, the situation changed very much actually. Why is that? Because now, we without the bounce here, what do we have is a buy signal. Buy signal supported by the bounce from the area around 38.2 Fibonacci level. Also, this is a flag which is a trend continuation pattern, and trend is positive. Also, we came back above 23.6 Fibonacci. Also, we broke the resistance here, and all that together gives us a positive sentiment. So we do have a positive sentiment on QE across the globe, with many on crosses with many other currencies. But again, before entering with full power on New Zealand dollar, remember, rate statement, interest rate decision, monetary policy statement, press conference. We will have that overnight for New Zealand dollar. So those pairs definitely will be influenced. Next instrument is American dollar to Canadian dollar, where I'm thinking that we should see a movement to this green area. We should see the price coming down here. What would be that movement? 100 pips. In my opinion, we should get there soon. American dollar to Japanese yen had an excellent session yesterday. Today, small correction, but plan stays the same. Even if we would decline to 100 pips, I think that the plan is to get to here. So actually, entering here gives you not very welcomed risk to reward ratio. I'm sorry, because in my opinion, where I would place stop losses, I would place stop loss somewhere here, 180 pips, and first target is 150. So potential loss would be bigger than potential profit, and I'm not entering positions like that. I always try to have profit at least two times bigger than a potential loss. I'm not aiming at 3 because it's not happening very often. I'm aiming 2, and with efficiency of slightly above 50%, that gives me an edge over the market, and in the long term I stay safe. Right, so we are exactly in the middle between horizontal resistance and a horizontal support. So in my opinion, it's not the best place to enter the market when you're in the middle of such a situation. Smart money, institutional investors, they enter the market on supports and resistances levels. Not now. Gold, as you can see, gold is trying to correct recent downswing a little bit. So this flag is off the table. There's no more flag here. Maybe we'll leave the upper line here. Those corrections, that correction was crushed. I don't see a hope for now for the gold. First hope will be seen once we will beat this horizontal resistance. That Fibonacci's are not well respected, so there is no need to have them on the chart. So that's the situation here. As long as we stay below this horizontal resistance and this trend line, the sentiment stays negative. Actually, if the price will continue correction here, will be a nice opportunity to sell. Silver is getting destroyed again. Another day, another lows. Yesterday we created a doji kind of candle. Today we try to correct this movement a little bit, but it's gonna be a struggle. The struggle is real here. We broke the long-term downtrend line, uptrend line, so the sentiment is negative, and most probably we will test this support soon. American dollar to Swiss franc, yes, that was one of our best analysis recently, because here, actually I'm telling about this possibility since somewhere here, okay? It's finally happening. We do have this inverse head and shoulder formation. We bounced off this horizontal support. We broke the upper line of the flag. Actually, we entered the market with a long position here on our live trading account. It was somewhere here, so we are on profit right now. This position is already protected with a stop, with a break-even point, so actually I'm not gonna lose money on it. Stop loss was originally here, it was moved on the break-even point. So far so good. I hope this movement will continue at least to this resistance, this horizontal resistance. I would love to see that. Australian dollar to American dollar. Those pairs from antipodes from Australia and New Zealand dollar are behaving really good today. There is a chance that we'll have a major reversal here. Maybe we won't have an engulfing or any other pattern, but if we will be able to draw a nice bullish candle, that could be an invitation for a further upswing. I thought that this reversal will happen a bit later, but it's not said that it's the end. Maybe we'll have a small bounce here, then a test of this line here, a double bottom formation, and then a major reversal. That obviously can happen, right? Canadian dollar to Swiss franc. As you can see, we bounced off this lower line of the symmetric triangle formation. It looks optimistic. It looks alright. We are still below the trend line, so I wouldn't enter this situation with a long position, because for me it's too early. But we have first signs of a possible reversal here. Australian dollar to Swiss franc. As you can see, Swiss franc is losing everywhere. American dollar to Swiss franc, Canadian dollar to Swiss franc, Australian dollar to Swiss franc. We have escaped from those safe haven assets. Everything is great. Global stocks are hitting all-time highs. So there is no reason to keep safe havens in your pocket, like for example yen, Swiss franc, or gold. You can see a result on that on the chart. So probably SNB is finally happy, at least a little bit, because they don't have to fight with all their powers to protect the Swiss franc from being too strong. Actually, now market is doing that. And oil and to indexes. Oil stopped after this kind of flash crash here when the price went significantly lower in 10 minutes. And we have a bounce here, recovery. We have a bounce of this horizontal support. The sentiment is neutral. I don't want to tell you that there is a negative sentiment, because this downswing is very steep, and actually I wouldn't mind the price correcting here. I would mind on a petrol station, but not as a trader here. So the price testing recent resistance as a closest, recent support as a closest resistance, that would be more than welcome from the technical point of view, and maybe a bounce and a continuation of this movement. That wouldn't be a bad idea. Actually, we can draw next support, because we may get there anytime soon. And S&P 500, after making new highs, intraday highs on Monday, we are seeing a correction here. We have to adjust the trend line to a new situation. I would say as long as we stay, well, uptrend is not negotiable, right? I think it's present, no doubts about that. As long as we stay above the green line, well, still after the breakout there will be an uptrend. After the breakout of this line will be an uptrend. But we're looking for places where some kind of a correction can start. There is none. Like for example, DAX. They beat the upper line of the channel up formation, and they are heading higher and higher and higher. Most probably we will get new highs, because the price what is making is a mid-term, short-term pennant. Most probably will have a breakout of the upper line of this formation and new highs, according to the party that stock traders are having right now, are having at the moment. Let me switch to the forex market one more time. Let's see the euro dollar is trying to correct those movements, but sentiment over euro stays a bit negative, at least in the short term, right? That's our view on the market right now. Guys, remember that trading and investment in financial markets involves an element of risk. And also, if you want more trading occasions, you have to follow us on our Twitter account and our website,